Hello everyone, welcome to this webinar today from ESS BIZTOOLS, COVID-19 Survival Panel. This is our 16th weekly session every Friday. And today I'm going to be making a presentation to you on fundraising opportunities for SMEs and obviously giving you some tips and suggestions as to how you might be able to utilize that sort of program. If you've got any questions, please type them into chat if you're watching this as a live webinar. If you've joined us as part of the Facebook Live, welcome. I hope you enjoy this overview within this webinar. If you have any questions, unfortunately you can't get straight through to us, so can you send me an email, peter@essbiztools.com.au, and I will get back to you later on. Fundraising opportunities for SMEs, a very appropriate title, I think, because with coronavirus and the various programs and problems that the banking community are having, I think it's going to be very difficult for your clients to be able to borrow money, most definitely from October onwards. And therefore, we thought today, as part of the COVID-19 series that we've been presenting for weeks, every Friday, that today we would visit the funding type arrangements. Incidentally, I should have mentioned at the beginning, if you were hoping to watch Mark Holton on his presentation today, unfortunately, Mark can't join us. He's caught up in the COVID-19 coronavirus restrictions, and he's currently trying to get across the border from New South Wales into Queensland, so he couldn't join us today. We will be rescheduling Mark for a couple of weeks' time, and we'll let you know when he's going to be with us. Coronavirus SME guarantee loan is where I'd like to start today. Now, until the 30th of September, loans of up to $250,000 for a 3-year term and 50% guaranteed by the Australian government. That's still continuing, and a low interest rate is to be charged by banks, although I've heard some banks are charging 4.5%, and I've heard also figures of 3.5% for some other banks. But from the 1st of October, there's going to be a change. The loans will be available for an amount of up to $1 million on a 5-year term, and still 50% guaranteed by the Australian government. The loan is also pitched at being a low interest loan, so hopefully the interest rates will be kept low. So that's a loan opportunity that you might care to look at for your clients and see whether they would like to apply. Also, the other big variation is that the first tranche of those loans, the $250,000, was to be specifically targeted at working capital purposes. The government's guidelines for the new $1 million loans basically say that the loans can be used for any commercial purpose. So over to you and working with your clients on submitting loan applications. Early stage innovation company, on the assumption that some people have been sitting at home in the lockouts, the working at home rules, and maybe have been looking at developing a product or a process or a service, undertaking the research and development, and now they're looking to say, geez, can we raise some money to get this business going? They could be considered to be an early stage innovation company. They have to be a company, of course. They normally have to be aged under 3 years, although there is an exception that some companies aged up to 6 years can get admitted, but we haven't got time to go through that today. They need to have developed a new product, process, or service. Their income in the last 12 months has to be under $200,000. Their expenditure in that 12-month period has to be under $1 million. So they're very small, they're new companies, but have developed something. And they can qualify by complying with one of two tests, one of two tests that can apply. The first test is called the gateway test. And to qualify under the gateway test, an applicant must earn 100 points. And you earn points from various activities. If you're undertaking research and development expenditure items, that the research and development component, and this is provable research and development accepted by the tax office, amounts to 50% or more of the company's total expenditure in that previous 12-month period, then the company would earn 75 points. They've only got to earn 100, they'd earn 75 from that. If the research and development component was 15 to 50% of the company's expenditure in that 12-month period, they would earn 50 points. If they've received an accelerating commercialization grant, which is a grant of up to $1 million, they'd earn 75 points. If they've been accepted into an approved accelerator program, they earn 50 points. If they've already received $50,000 investment in the company to acquire shares, not for loans, shares, from people who are not associates of the directors, they would earn 50 points. The company owns a patent or a plant breeder's right, they earn 50 points. If they own an innovation patent or a registered design, they earn 25 points. So this is how you go about accumulating your 100 points. If you accumulate the 100 points, and obviously you can prove it, and it needs to be put into a document with all the appropriate proof of that. And we have that within the ESS BIZTOOLS system for early stage innovation companies. They have qualified as an early stage innovation company. And we'll tell you the benefit of that when we do the second test. Now, if they fail the gateway tests, it's not all over. They can then move into the principles test. The principles test is a bit more detailed because the applicant must be able to supply detailed responses to the following questions. Is the company genuinely focused on developing for commercialization one or more new or significantly improved products, processes, services, marketing or organizational methods? And it's more than a yes answer, please. This is also going to be assessed by Oz Industry. And these are similar questions to what is asked in the accelerating commercialization application form. And they expect more than a yes answer. So it's probably going to be at least one page of typing that analyzes why they are genuinely focused on developing for commercialization. The next question is, does the business have high growth potential? And again, more than a yes answer. And the company may need to have some substantiation to that from a marketing consultant that this has got high growth potential. The next question, can the business be successfully scaled? So can it grow? The government's wanting these companies to be able to grow. And again, you may have to seek an expert to draft that for you. Does the business have the potential to be able to assess a broader than local market? Local market's not defined, but I suspect it means more than Sydney or Melbourne or Townsville or Wagga Wagga. Could be Australia as the market that's required. And does the business have competitive advantages? So if you can successfully answer those questions and supply the information, that then goes to the Australian Taxation Office and Oz Industry, who then review the responses to the principles questions. And they will then issue a tax office ruling, which if they've ruled in a positive manner, of course, it's a document that then can be shown to potential investors, because it's saying that at a certain date, they have accepted this company as being an early stage innovation company. Now, the main benefit out of being an ESIC is that the company then transfers benefits to investors, and that might encourage investors to invest in a company that is deemed to be an ESIC. There is no specific benefit for the company itself, other than the status of ESIC, which the government believes will help attract investment capital. And that is what is happening in the marketplace. Now, your clients are going to need assistance to go through this process. And in our system, we have developed a series of documentation that you could then prepare, sign off on, get the directors to sign the various components of it, and that is then available as a file, a printed file that can be handed to potential investors, or you could record it all on a computer stick and hand that over. Because the investor's going to need to be happy that they are going to receive their benefits. Now, the first one is a 20% tax offset based on their investment. And for a sophisticated investor, that can go as high as $200,000. Obviously, that's equated on $1 million investment. Now, the sophisticated investor can invest more than $1 million, but the offset cuts out at $200,000. For a retail investor, the maximum tax offset is $10,000, because the maximum amount that a retail investor can invest into an early stage innovation company is $50,000. So hence the $10,000 maximum offset. The other big benefit for investors in early stage innovation companies is if they own the shares for more than 12 months and less than 10 years, they don't pay any capital gains tax on the sale of those shares. Now, those shares have got to have remained in the name of the original shareholder, of course. That benefit is a benefit for the original shareholder. And if the shares are still owned in the company at the end of the 10 years, the company needs to go through a revaluation process, and those original investors have got a recalibrated cost price for their investment in that company. So that's the early stage innovation companies. The government introduced this legislation as a cousin, if you like, to crowdsource funding equity raising, and it has application, of course, to specific people who have developed some new technologies to help them to be able to raise capital, because as you can see, the companies generally are under 3 years of age. They're very small turnover and expenditure, and they probably won't have a track record, and this will hopefully assist. Let's move on down to the crowdsource funding equity raising. This is for companies with turnovers of under $25 million per annum, and companies with gross assets that are valued at less than $25 million. And it can be any type of company, any age. So you could have a 100-year-old company getting money as a crowdsource funding. I haven't seen one yet, but I hope I will, because I keep on talking about it. 100-year-old company. So they could qualify as a crowdsource funding equity raising company. Now, most of the benefits are there for the companies in this case, because they can raise up to $5 million each 12 months from the public, as long as the public keep on supporting them and buying their shares. So it's a great way for businesses. And unfortunately, not enough people know about it. And I think that's part of your role as an accountant, to talk the talk, to make sure people understand that this methodology of funding a business exists. Businesses don't have to be owned 100% by the founder. There can be more people sharing in the joy. And The investors that this is particularly targeted at is retail investors. Retail investors can invest up to $10,000 per company in a 12-month period. And sophisticated investors can invest any amount of money they wish. Currently, about 74% of investors in crowdsourced funding are retail investors. So retail investors, well over 30-odd thousand around Australia, have embraced this concept of investing in new businesses. The key document that has to be produced is a crowdsourced funding offer document, which is a type of prospectus that the directors and leadership team will need your assistance in the preparation of it. It will need a business plan beforehand, and then certain information is extracted and other information is added into what becomes known as the crowdsourced funding offer document. The directors and leadership team are going to have need an understanding pardon me, of the duties and responsibilities of crowdsourced funding intermediaries. They need to understand how all this works. Where are they going to get this understanding? I'd be suggesting from you as part of a professional service that you would be offering to these clients. They need to understand it. And in our material, we've got notes which show you the role, duties, and responsibilities of the crowdsourced funding intermediaries, so you can talk to your clients about that. I think crowdsourced funding equity raising is going to come into its own over the next few months in Australia as businesses realise how difficult it is going to be if all the experts are right. And I'm basically quoting them, who are saying that the banks will not really be interested in lending to SMEs beyond the end of September. Now, there is the $1 million loan that the government's put in place, but banks are rather worried about their exposure to the SME market. And as this COVID-19 coronavirus is going to linger on by the looks, I think banks are going to be fairly tough to deal with for SMEs. And this might be an alternative of where they can get some funding from and grow their businesses significantly. The other way you can raise money for a company is under Section 708 of the Corporations Act. This particular section was introduced about 35 years ago. It was rather difficult to raise money for people who were not relatives prior to then. But it's available for private companies. So there's a 50 shareholder limit. And a company can raise up to $2 million in 12 months from a maximum of 20 investors. And there's no formal process. There's no requirement to have an offer document produced. Most people produce a business plan, budgets and cash flows, and sit down and have a discussion. You cannot advertise it, whereas you can advertise the crowdsourced funding, capital raising. So it's quite restricted, but it's there. And it is a great way to raise some money, and it can be raised very quick. You could decide with a client this afternoon that they need to go out and raise $500,000, update their business plan, budgets and cash flows. You might have that finished by Monday or Tuesday, and you could be having discussions, or your client could be having discussions with some of their friends and colleagues, suppliers, customers, next Wednesday or Thursday. And perhaps they could have the money paid to them by Friday. So it can work pretty quick with Section 708. It's a lot slower with crowdsourced funding. The offer period can be open for 90 days. An early stage innovation company can also be slow because we're going to go through a process and then have negotiations with individual investors. So they're all different. They've all got their benefits. The other one I want to talk to you today about is the Australian Business Growth Fund, because the government's announced this. This is a $540 million joint government bank business growth fund. that's been put in place. A chair's been appointed. It's the former Tasmanian Premier. I don't know if the directors have been appointed yet. I haven't found any notification from the Treasurer as to who they might be. But the chair had indicated that the directors were going to be appointed and that he would be then organising the appointment of a CEO who would obviously organise the engagement of staff. And the chair was hopeful that this new fund would be in situation to be placing investments before the end of this year. This fund's going to make patient capital investments of between 10 and 40% in SMEs to help businesses expand. So they're not wanting to take over a business. And the fund is expected to grow to approximately $1 billion over the next couple of years because the government's hopeful of attracting some additional bankers. The top 4 banks have currently invested $100 million each, and 2 of the smaller banks put in $20,000 each. And the government's contributed $100 million, but they're hopeful of getting some other financial institutions to invest, and also some of the larger superannuation funds. The government's expectation is that the fund will invest in 30 to 50 companies each year that have got turnovers of between 2 million and 50 million. In the main, I think the companies that apply for this might have already raised some capital under Section 708 or crowdsourced funding, equity raising, or even under early stage innovation company. So this will not be their first attempt at raising money going to the Australian Business Growth Fund. So it's going to be very interesting just how this fund comes into operation and the assistance it can give. But all funding opportunities are welcome. Oh, I think they should be, because it is very difficult in small business land to be able to raise money. So let's look at the documentation that's going to be required to access these types of fundings. Some of them will vary, but I think in most cases, your clients are going to need a business plan that looks at where they're going for the next 3 to 5 years. What's their vision? What's their big audacious idea? How are they going to run the business? And one of the key items that needs to be analysed is customers. Do they already buy, or are we a very new business? So who are the potential customers? What feedback has come from various reviews that have been undertaken? Budgets based on the business plan assumptions for at least 3 years, potentially 5 years, and cash flow forecasts also linked back to the business plan and to the budgets. What's the cash flow projections that come out of all this? How much capital is going to be required? The applicant's going to need a leadership team that's got some vision, got some go, and the ability to implement the director's vision for this company. And they're going to need a board of directors and a leadership team which understands the concept of corporate governance. So there's a clear role for you as accountants or business advisors to assist your clients to become investment ready for this type of funding. They're going to have gone through this process. I think there's a great opportunity for you to be able to help them. So let's look at the 2020-21 strategies. I've already said to you, I think it's going to be difficult to negotiate bank loans from 1 October onwards, and I can probably hear some of you saying already it's difficult enough already. Well, I think it's going to get worse. But these other funding opportunities are there. The intermediaries for crowdsourced funding assure me there's a lot of potential investors out there. They're just trying to find the right deals. You need to produce the right deals for them. to alert your clients that this type of funding exists, and then take them through the processes, because they need to be investment ready. These types of funding opportunities are not just going to occur, they need to be investment ready. I think it's an outstanding opportunity for your firm if you are committed to supplying business advisory services. An outstanding opportunity. Let's look at the COVID-19 update, which we give at this time every week. I think accountants are going to be involved in looking at what's happening within your clients' businesses. How did they go in the June quarter as compared to June quarter 2019? Did they show a 30% drop in income? If so, they've got a chance of continuing in the JobKeeper arrangements from 1 October onwards. They also have to qualify with more than a 30% reduction in turnover in the September quarter as compared to the September quarter 2019. The apprenticeship subsidy scheme has been extended to 31 March. You help your clients submit their applications for that. The major banks have indicated that the repayment holiday borrowers, so a lot of the banks gave their business customers a 6 months repayment holiday. They will be able to look at extending that arrangement for 4 months, but the bank customer has to apply for that extension. And I've read reports that they're not going to be easy to obtain those extensions. So your clients are going to need a submission, business plan, budgets, cash flow forecasts to convince the bank why they should extend that 6 month extension into a 10-month extension. They are not going to be automatically granted. So let's look at an action plan for you in your accountancy firm in this year, which virtually every commentator is saying is going to be difficult for businesses. The Commonwealth Bank's Market Pulse report, which was released in June, which I hope you've read. Just go on to Commonwealth Bank Market Pulse report and read it. But a survey was conducted of accountancy firms all over Australia, different sizes, and business advisory services was nominated as the #1 service offering for 2020-21. How does that fit with your firm's strategies and priorities? And if you're going to do that, if you believe that's what's going to happen, are you going to gear up to be able to offer those services? What do you think business advisory services covers? I've been producing a weekly 5-minute video for the last 3 or 4 weeks that you can go onto our website and access, which gives you an overview of business advisory services. What's included? I think that should be your high priority on your action plan. Make sure that you are able to deliver business advisory services, which the accountancy firm who participated in the Commonwealth Bank Review nominated as being the #1 area for accountants to offer services in during 2020-21. So have you geared up to meet this market opportunity? Would you like to hear from us about a free, no obligation trial of the ESS BIZTOOLS products? Do it for 30 days. And you can register without having to talk to us. If you want to talk to us, you're most welcome to make a telephone call. I'll give you the number in a moment. But if you'd just like to go on and do your own research without having us talking to you and showing you around, you're most welcome to do that. Just go on to www.essbiztools.com.au, click on Access Levels, and then select Guest Trial Access. And we look forward to hearing from you after the 30 days. Alternatively, you might like to have a look at the government grant program, which we have, which is on a separate website, ESS Biz Grants. You can get a 14-day trial, test it on one or two of your clients, see how it works. Check the reports that you can get, the analysis that's done to fit your client's individual criteria in with the grants. And you can do that by going on to www.essbizgrants.com.au, start free trial. Our next webinar is on the 7th of August. Yes, last day of July today. And you can watch that or watch it later on, but it's been a live broadcast at 12 noon AEST on Friday, the 7th of August. And if you would like to watch any of our past 16 webinar presentations for accountants to assist in the navigation of the challenges confronting your clients from COVID-19, please go to our website. The details are there. And you can watch those past recordings that feature a whole range of people who have got specific skills or knowledge which will assist accountants on your journey with your clients. Our presenters on the 7th of August, Anna Gunther, the Director of Pledge Me. Anna's a crowdsource funding intermediary, and she's going to be talking about crowdsource funding opportunities for SMEs and accountants. And I'll be the other presenter, and I'm going to be talking about understanding the linkage between research and development, the Accelerating Commercialization Grant, and Early Stage Innovation Company. Because it's occurred to us that many of your clients could well have been undertaking research and development projects. I know that because in my consultancy business, I'm having inquiries coming in from people who have done that. But also don't forget the people who have undertaken their thesis for their master's degrees at universities. They work on projects, and some of those projects can be converted into commercial products. So they've undertaken the research and development, as long as they've incorporated the company, of course, and then they probably will need some extra funding. And that could come through an accelerated commercialization grant loan, but then they need to be able to pay 50% of the costs of that themselves. And that's where early stage innovation company status could come into play. So in the next webinar, I'm going to talk about those issues, which hopefully you'll find interesting. And we'll give you a suggested approach that you can have talking to your clients about how you can assist them on this journey. That's what it is. So to register for the 7th of August webinar, which is free, please go to www.essbiztools.com.au/webinars. And for more information, please visit our website, ESSBizTools/the Survival in Difficult Times, learn more, because that's the title we've given this whole campaign for COVID-19, coronavirus, and the seasonal conditions that we had leading into this period: drought, bushfires, floods. There's a whole range of government grants, but also suggestions on how you can help your clients get their businesses back into shape. So if you'd like to talk to us, please make a telephone call, 1-800-232-088, and I'll be happy to hear from you. Or you can send me an email, peter@essbiztools.com.au. So please stay safe. Thank you for your participation in watching this webinar live or watching it on Facebook on the channel, or watching this webinar as a recording at a time that suits you, whether it's 3 a.m. or midnight or wherever. Good luck with your firm as you meet the challenges that are going to confront your clients well beyond the end of September, I suspect. And if you want to talk to us, to bounce some ideas, or to get an introduction to some of our other affiliates who have been participating in these series, please contact us. Have a great day. Goodbye. And I hope that you have a great weekend. And if your footy teams are playing, that they win. Goodbye.